All right, diving right in, folks. We're talking Bitcoin price predictions today.
Beyond the hype.
Absolutely, beyond the hype. We want to get into the nitty-gritty, explore those predictions for 2025 and beyond.
And we're not pulling out any crystal balls for this one.
No magic tricks here, just in-depth analysis, really focusing on this concept of a bull market support band.
Yeah, that's a great starting point.
So instead of just throwing numbers out there, like picking random dates and prices, we're going to do something different.
We want to equip our listeners, give them the tools to understand the why behind these predictions.
Exactly. So you're not just blindly following along. You can understand for yourself what's going on.
Absolutely.
So let's kick things off with this bull market support band idea. What exactly is it?
Well, you can kind of think of it like a trend line, right?
Okay, the trend line.
It acts as a guardrail for Bitcoin's price. And if Bitcoin stays above this band,
Above it. Okay.
for a significant period, it usually suggests a bull market, a time when things are growing. There's a lot of optimism.
So we like to see it above the band.
We like to see it above.
But then what happens when it dips below? What does that tell us?
Right. Well, that's when things get a little bit, a little more interesting. It could signal a correction, maybe, or a potential shift in the overall trend. So
Yeah.
something to watch.
Something to watch for sure.
Right.
Now, the analysis we're looking at, it pointed out a pretty interesting little detail.
Okay.
Bitcoin has mostly stayed pretty true to this band, except for a couple of brief dips.
Oh, you're talking about the dips in Q3.
Exactly. Third quarter,
Yep.
both 2023 and 2024.
Right. Right.
So that's kind of a weird anomaly, right? Like, what's going on there?
It's a very interesting question. What caused those dips, and why did they both happen in Q3?
Is there something about Q3?
Yes, it's something specific about that time of year that affects Bitcoin. Or is it just a coincidence?
Okay.
It's really hard to say for sure.
Yeah, that's what we're here to figure out, right?
Exactly.
But let's zoom in a bit. The analysis also got into, Bitcoin's relationship with its 20-week moving average.
The 20 EMA.
20 EMA, there we go. So what can we learn from that?
So the 20 EMA, basically what it does is it smooths out those price fluctuations.
Yeah.
You get over a 20-week period
All right.
to give us a clearer picture of the trend, of the big picture. And if we analyze the distance between Bitcoin's price and this 20-week average, it can give us a clue about whether things are getting a little too heated.
Oh, I see. So if the price is way above the 20 EMA, that's a sign that things might be getting a little too frothy.
You could say that, yeah.
Yeah.
The analysis showed that when Bitcoin's price gets like 30 to 40% above that 20-week average, it often tends to kind of stall, maybe even correct itself a bit.
Makes sense. Like it needs to cool down.
Right, exactly.
And we've seen this happen, right? This
Yeah.
has happened before.
Several times over the past couple of years, yeah. Remember when Bitcoin surged in early 2024?
Oh, yeah.
Well, if you look at the 20 EMA around that time, the price was way above it. And then we saw the correction.
So it's almost like the market takes a deep breath after a big sprint,
Yeah, that's a good way to put it.
But does this mean we should be worried every time Bitcoin starts to run ahead?
Well, it's a good question, and it highlights something really important to remember. Bitcoin isn't, it doesn't exist in a vacuum.
Right, right.
There are other things happening, out in the world that can have a big impact on its price.
Yeah. Okay, so what else is going on behind the scenes? What are some of these hidden forces that are shaping these movements?
There are a few key ones. One is the 10-year Treasury bond yield.
Okay, that sounds a little
Wonky.
wonky. Yeah. Break it down for us.
It basically reflects how investors are feeling about the overall economy. So if that yield is rising, it suggests that they're getting a bit more risk averse, and they might start moving their money away from assets like Bitcoin.
And towards safer options.
Exactly, towards less volatile things.
So it's like if the economy's looking a little shaky, Bitcoin might feel it too.
Yeah, there's definitely a correlation there. And if we look at what's happening right now, that 10-year yield, it's been climbing.
Oh, really? It's going up.
Breaking out to new highs, actually.
That's not so great for Bitcoin, is it?
It's certainly something to watch. It could be part of the reason why Bitcoin is kind of stalling right now.
Yeah. Okay, so we've got the bull market support band, we've got the 10-year yield. Anything else we need to be aware of?
Oh, yeah, there's another factor, USDT dominance.
USDT dominance. Now, what is that?
So it refers to how much of the whole crypto market cap is held in USDT stablecoins.
Okay. Stable coin, so they're like,
They're pegged to the US dollar, so they're supposed to be, more stable than Bitcoin or other cryptos.
they're trying to be stable, at least.
Exactly, exactly.
Okay, so USDT dominance, why is that? Why is that important?
Well, because when you see a lot of people rushing into USDT, it it can be a sign that they're looking for safety, and maybe the overall risk appetite in the crypto market is going down.
So it's like everyone's heading for the bunkers.
Kinda, yeah.
So is that a bad sign for Bitcoin if USDT dominance is high?
Yeah, it can be a bit of a red flag. It's not always, a sure thing, but it's something to keep an eye on.
Okay. Okay, so what's happening with USDT dominance right now?
So interestingly, USDT dominance has actually been going down recently. Like it's swept below its previous low.
Wow, below the previous low. Okay, so what does that mean? Does that mean Bitcoin is about to take off?
Well, hold on. It's not quite that simple. USDT dominance is actually, it's kind of battling with its own bull market support band right now.
Oh, so there's drama even within the stable coins, huh?
Yeah, yeah, exactly.
So what are the possible outcomes here? What could happen next?
Well, there are kind of two main scenarios we could see. So if USDT dominance gets rejected by its support band
Rejected. Okay.
and starts to climb back up, it could actually be a good sign for the crypto market in general.
Because it means people are feeling more confident.
Yeah, more confident, more willing to take risks, which could be good news for Bitcoin.
Okay, that makes sense. So a comeback for USDT dominance could mean a boost for Bitcoin. But what about the other scenario?
Right. So the other scenario is if USDT dominance breaks through its support band and just, keeps falling.
Okay, and then what? What does that tell us?
Well, that could suggest a bigger pullback for Bitcoin might be on the horizon.
Oh, so USDT dominance is a pretty important thing to watch then.
Yeah, definitely.
Okay, okay. Now, I know there's another indicator we need to talk about, and it's got like a really intimidating name.
Could have about the SSRO.
Yeah, the SSRO. Stablecoin. Uh,
Stablecoin supply ratio oscillator.
there you go. So you make it sound so easy.
It sounds more complicated than it really is. It basically just gives us a glimpse into the supply and demand dynamics within the crypto market.
So like how much is out there, how much people want it, that kind of thing.
Exactly, yeah.
Okay. So what's the SSRO telling us right now? What's going on there?
Well, this is where things get pretty interesting.
Mm-hmm.
The way the SSRO is behaving right now, it actually looks a lot like how it was moving back in late January of last year.
Okay.
Back then, it spiked, then it declined, then it spiked again. And guess what happened around that time?
Did Bitcoin go up?
It sure did. We saw a pretty nice price surge.
Interesting. So you're saying history could repeat itself.
It's possible, right?
Yeah.
It's certainly something to think about.
Yeah, I mean, if this pattern plays out again, that could be big.
Definitely.
All right, all right. So we've covered a lot of ground already. We talked about the bull market support band. That gives us a sense of the overall trend. We've got the 20-week moving average, helps us see when the market might be getting a little ahead of itself. And we've dug into USDT dominance and the SSRO. These are all giving us clues about market sentiment and the balance between stable coins and everything else.
Yeah, it's like putting together a puzzle, right?
It's a crypto mystery.
That's a good way to put it.
And we're going to keep trying to solve it. But before we get too far ahead of ourselves, we're going to take a little break, and we'll be back with more in part 2.
All right, so picking up where we left off.
Back into the Bitcoin world.
Yeah, back into it. We were talking about some interesting historical patterns.
Oh, yeah, about those January corrections.
Right, those corrections in January, especially in the years after a halving.
So let's talk about that for a second. Halvings, those are a big deal, right?
Yeah, huge. I mean, that's when the reward for mining new Bitcoin gets cut in half, so it really affects how quickly new Bitcoin comes into the system.
It's like a supply shock almost.
Yeah, exactly. And historically, those years after a halving, we tend to see some pretty big price swings.
Okay, and you're saying the analysis pointed out a pattern of corrections, like notable price drops happening in January of those post-halving years.
Exactly. Yeah. So that's something to be aware of, as we head into January ourselves.
So is this is this a Bitcoin tradition now? Do we just expect a crypto hangover every January after a halving?
I wouldn't say it's a guarantee. Past performance and all that, right?
Right.
It's a pattern, definitely a pattern, but it's not, set in stone.
Right.
But it's definitely worth keeping in mind.
Okay, so January could be a little bit of a roller coaster ride. But hold on a second. The analysis also mentions some potential upward movement
Right,
factors.
some positive things to consider too.
Yeah, what's the good news here?
Well, there are a few indicators that could suggest some price increases. Remember that SSRO we were talking about?
The stable coin supply ratio oscillator, yeah.
Yeah, that's the one. It gives us that insight into supply and demand. And right now, the way it's moving, it actually looks a lot like how it was moving back in late January of last year.
Okay, and what happened then? Remind me.
Well, back then it spiked, then declined, and then spiked again. And that final spike coincided with a pretty significant Bitcoin price surge.
So you're saying there's a chance we could see that happen again?
It's possible. History doesn't always repeat itself, but it often rhymes, as they say.
I like that. I like that. Okay, so the SSRO is one thing that's pointing towards a potential boost. Anything else?
Let's talk about the QQQ for a minute.
The QQQ. Okay, now what is that?
So the QQQ, it's an exchange-traded fund that tracks the performance of the Nasdaq 100 index.
Okay. The Nasdaq, so that's a stock market thing.
Yeah, it's a basket of tech stocks, basically. And what's interesting is if you look back, the QQQ actually rallied pretty nicely 2 weeks after its one-year anniversary in 2024.
Okay, but how does that relate to Bitcoin? Is there like a secret connection I don't know about?
Not directly, no, but the QQQ can kind of give us a sense of the overall market sentiment. Like if the QQQ is doing well, it suggests that investors are feeling pretty bullish, and that positive feeling can sometimes spill over into the crypto market.
So a healthy QQQ could mean a healthy Bitcoin.
Potentially, yeah. It's not a direct link, but it's something to keep in mind.
Okay. Okay, but remember we were also talking about that 10-year treasury bond yield, how that can affect Bitcoin's price.
Right, that's still a factor to watch, definitely.
So what's the latest there?
Well, as long as that yield keeps going up, signaling that risk aversion we were talking about,
Right.
it could create some headwinds for Bitcoin for sure.
So it's like a tug of war almost, right?
Yeah, you could say that.
On one side, we've got these positive signs like the historical patterns and the QQQ doing well. But then on the other side, there's that 10-year yield looming, which could throw things off.
You got it. The market is it's complex. There's always a lot going on, and it's never just one thing in isolation.
Makes sense. So what's the bottom line here? What should people be watching for as we go into the new year?
Okay, so key takeaways. Keep an eye on that bull market support band. If Bitcoin stays above it, the overall trend is still looking good.
Okay, bull market support band, check.
But be mindful of those January corrections, especially
Mm.
especially with the halving this year.
Right, right. January could be a wild card. What else should be on our radar?
The 10-year yield. If it keeps climbing, it could be a bumpy ride for Bitcoin, but if it starts to cool down, that could be a good sign.
All right, so bull market support band, 10-year yield. Got it.
And don't forget about USDT dominance. Will it bounce back from its recent dip?
Or will it keep falling?
Exactly.
Yeah.
And that SSRO with its potential echoes of last January. Lots to keep an eye on.
It's like we're crypto detectives.
A little bit, yeah.
We've got all these clues, and we're trying to figure out what they mean, what's going to happen next.
Absolutely.
It's a good thing we like puzzles, huh?
It definitely keeps things interesting.
That it does, that it does. But before we get too carried away with our detective work, we should probably remind everyone this is not financial advice.
Right, we're just exploring the market here.
Yeah, learning the language, having some fun with it.
Exactly. We want to give our listeners the knowledge and the tools to make their own decisions, not tell them what to do.
Absolutely. So as we head into the new year, keep your eyes peeled, keep your minds sharp,
Stay curious.
and never lose that sense of adventure. The world of crypto is, it's never boring, that's for sure. Back for the final round of our Bitcoin deep dive.
Round 3. We've covered a lot of ground.
We have charts, indicators, all those forces that are shaping the crypto world.
The big question is, though, what does it all mean for our listeners? How can they actually use all of this?
Yeah, that's the key, right? It's one thing to understand all these concepts, but how do we actually apply them to our own crypto journey?
Well, it's kind of like learning a new language, right?
Yeah.
You learn the vocabulary, you learn the grammar, but the real power comes when you can actually start using it to communicate.
So in this case, we're not just passively observing the market anymore. We're actually we're participating. We're making moves.
Exactly, and hopefully more informed moves.
So how do we do that? What are some like practical steps that people can take?
Well, I think the first thing is just remembering that